And good afternoon, everyone, and welcome to this month's Horizon webinar, today on the subject of pension scheme investment in timberland. I am John Wilson, Head of Technical at Spence and Partners, and I will be your chair for today's discussion. But doing the heavy lifting, I'm joined today by David Robertson, who heads the investment division of Scottish Woodlands, helping to secure a range of forestry and land subjects on behalf of private, corporate, and particularly relevant for today, institutional clients. I am also joined by my colleague Simon Cohen, who heads up investment consultancy services at Spence and Partners. Just before we get started with the conversation, a little bit of housekeeping. The platform we're using today, which is Zoom, means that the only people you will see and hear will be the speakers, but engagement is possible and indeed is encouraged. So please post any comments or questions on the Q&A box that you can hopefully see the icon for on your screen. On my screen, excuse me, it's down towards the bottom. I'll keep an eye out for any posts and ensure that your questions are addressed. So, without further ado, turning to today's agenda, Simon, perhaps I could start with you just by way of an introduction. So what do we mean by when we talk about timberland investment?
So John, put very simply, what it means is buying some land and planting some trees on it. And what that means is what you're getting really is exposure to the growth in the timber. You're getting exposure to inflation, general inflation, and you're also getting exposure to the change in the value of the timber and the land in excess of general inflation. So that's really driving the sort of return profile that you're getting from investing in timberland. And something that I know we'll talk about later, which has come along more recently, is the ESG, environmental social governance benefit of investing in timberland and the potential for carbon offsetting and carbon credits.
Simon, thank you. David, maybe we could get a little bit more granular and I could ask you to build on that. So why would pension scheme trustees consider such an investment and making sure that it's tailored to all attendees at this webinar? How accessible is it to different types of scheme, both large and small?
Great, John, and thanks for having me along today to be involved in the webinar. Yeah, I think the main reasons for investment are returns, clearly, and I think we'll come on to that in a little bit more detail later on as well. Sustainability aspects of the asset class are very important and have been a major consideration for especially institutional investors actually, and looking towards the ESG aspects of that. And as far as ESG is concerned itself, carbon is extremely important, whether in setting into their own fund or corporate emissions, or perhaps as an alternative income stream through generation of carbon credits and sale of those carbon credits. Forestry also aligns with at least 8 of the 17 UN Sustainable Development Goals. So, on a sustainability aspect, it's very highly rated. And stakeholder engagement is extremely important. There is a certain feel-good factor about investment in forestry that corporate entities enjoy and their staff certainly enjoy. Where perhaps you can involve your staff in some of the site visits, management interventions, that type of thing. So there is an opportunity to get staff involved. Just to move on to how accessible the asset class is, there are really 2 main routes into forestry investment. That's either through a pooled fund structure or through direct purchase. If you're entering in through a fund, you're purchasing really into a diversified portfolio of forests managed by a fund manager. So your exposure is slightly lessened in geographic risk because you're investing over a large pooled investment. But returns are generally lower than direct ownership because you have that structure in place. There are several well-developed providers of these pooled fund services within the UK. The second option being direct investment and purchase of forestry portfolios and forestry assets as a direct investment through an asset manager. And that really allows an investor to maximise the income and to have more involvement in the management practices and processes involved with the woodland itself. The acquisition process in that case is managed by the forestry investment specialist, and you have notionally more exposure to slightly lower geographic diversity, but that I think is overweighed by the return benefit.
Well, thank you, David. So, but both direct and indirect investment is possible. So the investment opportunities are there for smaller and larger schemes. But what about disinvestment? By which I'm referring to trustees having any liquidity concerns, something that the Regular has written about recently. Any issues around liquidity and this asset class? But perhaps Simon, you could speak to this question first.
Sure. I mean, these are long-term investments. So typically the time horizon is you're looking at 10 to 20 years. And you're really looking, this isn't a liquid asset class here, where you should be, if you're going to invest in this, you should be going on the basis that you're going to be investing for a long term. And the only real way to sort of get out of these before that time period is through a secondary market. And the secondary markets do exist. And then essentially there's two ways of achieving that sale. One is the manager themselves might be able to sell your holding to somebody else within their client base. The alternative way of doing it is to appoint a third-party broker that will go out to the market and see if they can place your holding with somebody else. There's obviously costs attached to that. You've got to pay for a third-party broker. And the other issue, even if you can sell it, to a degree, it depends on how much you can sell it for. And your ability to sell it for a certain price very much depends on the supply-demand dynamics at the point of time at which you want to sell it. So again, there's a lot of uncertainty around that. So there's no guarantees that you will get, its true market value. You may have to sell it at a discount. You may be able to sell it at a premium, but it really depends on the state of the markets at the point at which you want to sell it. Historically, there's not been much of a secondary market, but that is developing over time, and that's gathering pace there, that there's more of a secondary market available as more and more people invest into timber, and timberland becomes more popular in investment. But clearly that is an important issue for a pension scheme to consider. And you could argue, particularly for those immature pension schemes, liquidity isn't so much of an issue, because those immature pension schemes have a long time horizon. They're unlikely to buy out in the short to medium term, so they can afford to lock away their money within this type of investment. Whereas if a pension scheme is mature, or there's uncertainty about the sustainability of the pension scheme, and it goes into a distressed situation, in those sorts of scenarios, the pension scheme is more likely to be a seller, and typically be a forced seller, and therefore potentially not get good value for money when selling its assets. Okay,
yeah, thank you, Simon. Okay, so I mean, you touched on the state of the market. So maybe, on that note, let's talk about the potential returns that trustees might expect. David, could I start with you first, please, on this one? So how does this investment perform relative to other asset classes?
If you wouldn't mind, John, I think I might just take one step back there and cover off a little bit of liquidity side on other aspects. And I think Simon has talked very much about the fund portfolio liquidity aspects. When there is a direct investment in the asset class, liquidity, and I know that the terminology of liquidity in fund management is very different from what we would consider in normal forestry terms. And I understand liquidity is, can you sell it within a day? Well, simply the answer is no within a forestry context. But there is a very ready market for directly owned forestry properties, and they can be exchanged relatively quickly and very much the same as any other real asset like commercial property and such like. So, long-term liquidity is not really a significant issue in direct ownership of these assets. And we have a very ready market in the UK forestry industry at the current time for forestry assets, and typically we're looking at 4 to 6 week transaction period. So I just wanted to cover that off, to be clear that there is a distinction between the fund and direct sales and whether you want to dispose of these assets.
Yeah, that's really important, David, and thank you for that. So I mean, maybe just to close that one off, so even for pension schemes that might have sort of on their journey plan or their long-term objective that they're looking to get to buy out, that does not necessarily rule out this asset class for schemes with that type of strategy. Correct
in my view. Yeah. So returns, to move on to that question, so I think that was my phone potentially running. It is.
The joys of doing things virtually.
With me.
Yeah.
Sorry, hang up, I'm afraid, on that one. So returns, I think it's fair to say there are 3 main variables to take into account when you're looking at forestry returns.
Very determined.
They are very, very determined. I'll leave it off the hook, and hopefully they're not just listening into this call. So 3 potential aspects that drive forestry returns: the biological growth of the crop, increases in value of timber, and increases in value of the land. As trees grow, looking at the biological aspect, as trees grow, they not only develop in size and therefore in volume, but the larger the trees become, the more valuable the end uses of the timber that they produce becomes. So the larger the tree, the more of that can be used for high end uses, and the more valuable that tree becomes because of that biological growth. When we look at the value of timber, the outlook for timber prices in the UK is strongly positive. We are currently the 2nd largest importer of timber products in the world, behind China, which I always think is an amazing statistic for the size of country that we are. So we're highly reliant on imports of timber. And when we look at the world timber demand, it's set to triple by 2050, according to the World Bank. So we've got extreme pressures on timber throughout the globe, which is a really good driver, a really good indicator of enhanced timber prices going forward. I think one of the other aspects, we're seeing an increased specification of timber use in construction, driven by a greater drive for sustainability in the construction sector. And to put that into context, England has increased its construction of timber frame buildings by around about 25% in the last 4 years. And that's driven by a drive for more sustainable construction processes, off-site construction, speed and efficiency, and such like. And sort of coupled to these factors is the value of land. Rising timber prices don't only have an impact on the value of timber, but they also substantially impact the value of land, because the underlying land becomes more financially productive. Therefore, the value of that land increases. And to put that into context, we've seen roughly a doubling of land values in the last 5 years in the UK, land specifically suitable for forestry, because of the demand for timber and the increasing timber prices that we've seen in that period.
Okay, Simon, I'll just check before moving on. Anything you would add on the performance question?
I think it's summed up well. I mean, that's one of the reasons for investing in timberland, but we shouldn't forget there's also other advantages to investing in timberland from a pension scheme's perspective. We've spoken about the sort of growth that you get from land values and timber, and so you are getting, to a degree, inflation protection when investing in timberland. Obviously, pension schemes' liabilities are linked to movements in inflation, so investment in timberland, it's a real asset, will give the pension scheme that form of protection. and just generally investing in timberland, that the return profile will be different to other assets that the pension scheme holds. So investment in timberland will provide a form of diversification across the portfolio. So you might find scenarios where equities are falling, bonds are falling in value, but you've actually got timberland going up, and vice versa. So it can be considered as a risk management asset class as well as a return-seeking asset class.
You concur,
Yeah.
David?
Yes, yeah, very much. And I think the point that I should have made and forgot to make, and when I was talking about returns previously, was the historic position. And timberland has been extremely stable as an investment class over the last 25 years, and the most recent IPD index, which is dated in 2018, showed that the 25-year annualized return on forestry investment was 9.25%, and that's an extremely high return. And it's fair to say that over that period we had no periods of negative returns. The past 10 years of that was actually around about the mid-teens. So we have seen extremely strong growth in timberland asset returns over that period.
Okay. Thank you. Just a reminder for our delegates that if you do have any questions for Simon and David, please do post them via the Q&A site, and I am keeping an eye out on that. But just moving on and picking up on a couple of points that have been sort of tentatively touched on so far. I'm thinking here geography and carbon footprint. So my question is, are there any particular risks for trustees, especially if trustees are exposed to global markets? Maybe I could ask you to address that one, Simon, and also just starting to introduce the sustainability investment credentials of timberland as an investment. David, the possible risks from an ESG perspective. But Simon, if you could go first on the geographical aspects, please.
Yeah, I mean, if we look at how you access timberland, from a fund management perspective, there's quite limited choice within the UK, and so therefore you could potentially start to look overseas and look at the overseas markets, and there's more choice there around getting exposure to timberland. The issue that you face primarily is one of currency risk. Particularly a lot of the market is a US market, and so you're subject to dollar sterling currency risk, and you could hedge that, but there's a cost to hedging that. So that's one thing with any overseas investment. As a UK investor, pension schemes need to be cognizant of. I mean, the other issue about investing in an overseas market is just the peculiarities of that particular market. And for example, in the US market, there's less insurance that's carried out around timberland. We haven't really spoken about it, but some of the risks around timberland, for example, there's the risk of fire; it could burn down your forest, and there's the risk of some sort of pest, depletes your stock. So there's all these different types of risks that need to be managed, and particularly in the US, for US, maybe because it's expensive, the US, they tend not to insure against quite a few of these risks, which is quite different to the UK market, where the UK market insurance is used more significantly. So there's these risks that you need to think about, and one of those risks, as I mentioned, is the currency risk about investing in overseas, but also, there's particular risks for particular markets depending on how those markets operate. Like the US, as I said, don't tend to use insurance.
Okay, do you want to pick up on that, David?
Yeah, I think it's fair to say there are the both physical risks and reputational risks. I suppose are probably the two aspects I would break that down into. Physical risks, as far as I see it, and I'm really focusing on the UK market here, come down to pest, disease, wind throw, is a risk because we're an oceanic climate, so we tend to have high frequency of high intensity storms, and fire. So wind throw and storm damage and fire we can insure against. Pest and disease we can't in the UK. So pest and disease probably would stand out as being one of the, it's not, I was going to say major risk, it's not a major risk, but it's one of the risks that one would need to be aware of when investing. We have had diseases in the UK like Phytophthora ramorum, which have infected larch crops. Thankfully, larch are not significantly productive element of the UK crop balance, but we have seen infections there. We're heavily reliant on one or two major species, and we grow a lot of these species by clonal development. So they are potentially vulnerable to disease, but it's fair to say that the Forest Research, who are the UK government's body who look after crop health and such like, are very, very on the case as far as that's concerned. I think reputational risk really comes in two parts: overseas investment, exposure to practices which are perhaps not seen here in the UK, or perhaps not as in control by the fund managers as one might expect. And that could be anything from illegal felling to displacement of tribes within rainforest areas and such. So there's lots of aspects like that. Okay. In the UK, reputational risk, I think, is controlled very much by the processes that we go through in the application for new planting in the UK and for the application for any felling permissions that we get. Huge amount of consultation, a huge amount of diligence and surveying goes into that. So I think that reputational risk is more controlled here.
Okay, thanks both. Now the reference to ESG was actually a bit of a segue for my next question. I mean, ESG and climate change in particular, I'm assuming, are on every trustee risk register at the moment, especially with regulations changing from October this year. So let's talk about the credentials of this investment in the context of climate change and net zero strategies. Maybe David, you could go first this time.
Yeah, well, I think first off, when we're looking at the impact of timberland forestry investment in the UK, I think we have to bear in mind that recent surveys suggest that the built environment is responsible for around about 40% of all the carbon emissions in the UK, and 50% of that's in energy use, transport and infrastructure, but the other 50% is in the construction and ongoing maintenance. So timber production has a pretty significant part to play in that going forward by providing renewable materials for construction and packaging, and also substituting for materials such as concrete and steel and plastic that are massive emitters of carbon in their manufacturing process. So timber can play a very, very strong role in that decarbonisation process. Carbon itself is a very hot topic in the industry at the moment. We ourselves in Scottish Woodlands have recently employed our first carbon manager in the business, and she is focusing purely on servicing people who have an interest in growing timber for carbon, offsetting carbon within their businesses, and looking at that aspect. And I think in that front, it's essential for businesses to look to reduce their carbon emissions in line with the government targets for 2050 in England, 2045 in Scotland. But many companies can't simply reduce their carbon emissions to zero through efficiency processes. So it's essential that they look at ways to offset what they can't reduce. And investment in planting land would allow them to inset carbon sequestered in their own forests into their own fund or corporate entity. So that's it's an angle that we're seeing people taking very much now with a view to their net zero strategies going forward. Alternative, also the other aspects of this are the benefits for wildlife in forestry establishment, water quality and water attenuation and flood risk reduction, community benefits, public access, certainly in Scotland, and the wider benefits of cleaner air, and access to forest for recreation and health benefits as well. Again, the economy aspects of ESG monitoring. In the UK, we're a £1 billion economy in the timber industry, 25,000 employees, most of those in fragile rural areas. So it's a very important aspect of what we do. And I mentioned earlier about the alignment with the UN Sustainable Goals, 8 of the 17 Sustainable Goals. So again, very strong trigger points for ESG investment.
Okay. Simon, anything you would add on that in the sustainability context?
Not really, to be honest. It just obviously, as you said, there's a greater emphasis and requirement for pension schemes to take ESG seriously, and this type of asset class, seems to tick those boxes and really help meet those requirements.
Okay, I'm conscious of the time. We are scheduled to finish at 2:30, but if there are any questions, it's perfectly possible for us to run on a little. But let me ask something, I think, on a related note. I mean, this asset class is not new, but it seems to have become very topical again, or almost, if you like, reinvented itself. I just wonder, so Simon and David, just what your closing thoughts are in that context. So Simon, do you want to go first?
Sure. I mean, I think one driver is the ESG angle. As we mentioned, that's become a lot more topical. So that's brought this asset class to the fore, and it, there's more publicity around it. It's become more popular, so more interesting. Historically, it's tended to be the larger pension schemes that have invested in this asset class. But what we're seeing is a trickling down to the smaller pension schemes, and now the smaller pension schemes are thinking about, investing in it. And I suppose the other thing, if you think about the current economic environment, where you've got equities and bonds all looking quite expensive at the moment, and there's a search for yield and a search for return for pension schemes, this sort of asset class becomes far more appealing.
Okay, and David, your thoughts?
Yeah, and I think I cast my mind back to when I came into the forest industry in 1988, the year I left school and started working in the local estate in forestry, and that was the year that the budget, the Chancellor at the time, whose name escapes me at the current time actually, basically stopped the taxation benefits for forestry, because forestry had an extremely bad reputation and had developed a very bad reputation for planting the poorest and most ecologically sensitive areas of land. Had a very bad reputation of tax avoidance. And that has very much changed. You mentioned earlier on that forestry has reinvented itself, and it very much has in that period from the mid-90s onwards. We're now a highly regulated business, in fact, one of the most highly regulated forestry sectors in the world. We have lots of checks and balances in place to ensure that what we do is done in an ecologically sound and sensitive manner. Modern forestry is both ecologically diverse and highly productive. Indeed, in Scotland itself, we're probably the best growing conditions, perhaps only second to Ireland, for timber in Europe. So we're in a very, very good position to grow good quality timber at high volumes, and therefore to make a good return from that. Coupled with that, we also have a very, very strongly developed processing sector, which is one of the most advanced in the world. So we are making the most of the timber that we produce here in the UK by milling it in the correct way and getting it in the correct market. And that's resulting in stronger returns for everybody involved in the process.
Yeah, I mean, and just on that note, the kind of evolution of the sector, so somebody just has inquired about what type of trees are typically being planted in the UK now.
The type of tree hasn't necessarily changed. It's more the type of land that we're planting. The type of tree, the main species, the main productive species that we grow here is Sitka spruce. That's, that is the mainstay of the sawmilling sector. It's the mainstay of the productive forestry classes. But we also diversify into Douglas fir, Scots pine, broadleaf trees. I think the focus now is very much on the right tree in the right place for the right reasons. So it's all about focusing on the right ecological and productive reasons for planting trees in the right place.
Okay, thank you, David. Sorry, my screen froze there, but only momentarily. Perhaps it was just reminding me that our scheduled 30 minutes for this presentation. And I am just doing a last check of the Q&A box, and it looks as though we have covered the issues that our attendees were hoping that we would address. So I think on that note, with my thanks to today's speakers, I hope everyone found the webinar helpful. Please look out for details of future Horizon webinars. Details of these will be sent to everyone on our mailing list, and details are usually posted to LinkedIn. So thank you, David. Thank you, Simon. And thank you, everyone who dialed in. Have a good day.
Thank you.